Hello, and welcome to this Rent Risk Resolve presentation on the risks of rising interest rates. In this presentation, I'll be talking to you about the possible effects of interest rate rises and how you can plan ahead to ensure you minimise the likelihood of experiencing difficulty should rates rise in the near future. Most landlords will use a buy-to-let mortgage at some point during their lettings career, which is why understanding interest rates, how they are set, and the impact that they can have on your repayments is so important. Rising interest rates can pose a substantial risk to your profitability, and in some cases the viability of your lettings business. Interest rates have been at an historic low since March 2009, held at 0.5% by the Bank of England's Monetary Policy Committee. However, it is expected that the base rate will rise at some point this year, and any rise in interest rates will impact the buy-to-let sector, particularly the cost of buy-to-let mortgages, and landlords would be well advised to make some contingency plans for this eventuality. Let's first consider how much of a risk increasing interest rates can be to landlords. The first and most substantial of the risks associated with rising rates is financial difficulty. How would you cope with higher mortgage payments? Is this something you've planned for? Higher interest rates can cause a reduction in surplus cash flow from rental properties, and in a worst-case scenario, result in an operating loss, which could leave you in debt. Lenders assess the ability of a landlord to service buy-to-let mortgages when they evaluate applications for finance. Higher interest rates mean higher payments, which may squeeze a landlord's margin and make you a higher risk for lenders. A failure to plan ahead and consider your options may have negative consequences should the base rate increase. This can in turn lead to other serious problems with your lettings business, potential problems managing tenancies, and an additional strain on your workload. Falling short on your payments can ultimately lead to repossession of your property. It is essential that you plan ahead in order to protect yourself as a landlord, and also to prevent the worst from occurring. So, what can you do to shield yourself from the worst of these risks? Consider switching products. If you are not tied to a particular mortgage product, consider looking around for a better deal. If you can, you may wish to pay down your mortgage. Reducing the value of your mortgage will reduce exposure to increases in interest rates. However, you should bear in mind the tax implications of reducing your principal. Raise rents. An obvious solution to the problem of increased mortgage payments is to raise rents. However, rents are an inelastic cost, meaning that there is only so much flexibility in a household's ability to pay. It will not always be possible or advisable to increase rents at the same time or pace as interest rates, as you may already have fixed-term agreements in place with your tenants. Saving and budgeting. Probably the most important safeguard is to have a savings plan to augment your property investment and provide a buffer should increased cost eat into your margins. As well as having a solid savings plan, landlords should also take the time to plan their budgets in advance to make allowances for future interest rate rises. It is much better to prepare for increased mortgage payments beforehand and will help reduce the level of stress experienced if and when it happens. Finally, if increases are likely to make your investment non-viable, you could consider disposing of higher risk property. If a particular property is relatively highly geared and consistently underperforms, you may wish to consider selling before any increases kick in. As before, it would be helpful if you considered your options sooner rather than later. The NLA can support you in doing this through NLA Mortgages, a free online buy-to-let mortgage sourcing system enabling landlords to search and compare products from the full market offering. It can help you to select the best mortgage for you, and NLA members benefit from cashback upon completion. With a dedicated buy-to-let team researching the mortgage market, NLA Mortgages can offer exclusive deals that are not available directly from lenders. To find out more about NLA Mortgages, or to sign up to the service, visit landlords.org.uk/services/NLA mortgages. For more information on this topic, visit our Rent Risk Resolve webpage and download our guide to how to deal with rising interest rates. To contact the membership team or advice line, please call the numbers on screen. Thank you for listening.